Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. The world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, the interest rate market is just freaking out this morning. Should I call it freaking out? I mean, it's not really freaking out. It's just like, give us some respite here, man. It's just down and down and down. Well, yesterday was a little bit interesting because we kind of had this move up and then kind of trail off through the rest of the day. I want to come here and show you because I think this is really important. We come over here to yesterday. All right. A little bit too far. There you have yesterday. Let's zoom in a little bit. So you're going to see this a lot, I think, in the future. This kind of curve. See this curve? This time it curved all the way back. So it was like a big buy and then kind of fade off the rest of the day. And that, when I first started looking at treasuries, like way back in 2009, that's what I remember seeing. That's what it looked like every day. So we're returning to a more standard interest rate market. But here you can see when the Europeans came back from holiday and everything, just gadoosh. And now here on the Elben, another gadoosh. Although I do think that they will probably retrace it. So that is kind of the position that we are in the treasuries. When you come over into the equities continue to struggle yesterday. Man, high, low, high, low, high, and now we're getting another low. It's just this range is just bleh. I mean, I guess if you want to trade the range, that's awesome, but I hate that kind of action. That's terrible kind of action for me. Oil not taken off here yet, but we're starting to see the market settle into the environment that we're in. Okay, so natural gas having a sell off there, so that's interesting. We get into gold and silver. So yesterday gold started out looking really great, right? And then they really hit back there. And copper, well, geez, when we first looked at copper, there was a big move down, but let's come back up. But I think a lot of that, from what I'm understanding, and I don't keep up on the metal market headlines that well, but apparently there are like some headlines specific to like certain mines and negotiations with labor and things like that. So that's maybe why we're seeing the volatility that we did in copper. But then we come over and I think this could end up becoming like the real story. Is we've got the dollar above 100 and almost touching 101, which is really high, by the way. And it's pretty crazy to think about how we're all, inflation is this big baddie, but the dollar is really strong as well, which is just really kind of paradoxical. I think you got Bitcoin. Somebody dug Bitcoin out of the depths here. And I think that this is another one. You're probably going to see this a lot. These guys cannot afford to allow Bitcoin to succumb below 40K and then start pushing 30K. Okay, that could lead to a complete flush of the entire Bitcoin ecosystem. So you're going to continue to see tether prints and attempts to dig it out. It doesn't seem to go anywhere afterwards. All right, so that's where we're at. Can see the liquidity here in the treasury is just dismal. Oh, by the way, we get housing starts and building permits here. So let's see here. It looks like, well, housing starts a little bit higher than expected. Building permits a little bit higher than expected. So the housing starts change month over month is spot 3 versus an expected -1 spot 6, and spot 4 versus a -2 spot 4. That may, well, that's kind of going to be interesting because that suggests that maybe the issue we're having with housing supply may start turning around. Maybe Bitcoin higher. Well, I don't know. The problem that we see here in the Bitcoin is that somebody will dig it out of the 40K and then it just kind of languishes and then maybe gets shoved back across the threshold. So um it could be accumulation. It could be accumulation in that area, but it's kind of hard to say. But this environment, that it's really actually, well, I mean, there's a bunch of different factors, right? Because Bitcoin supply is always kind of drying up and everything, but the interest rate environment is not really very favorable to Bitcoin either. And there's some other things going on. So, for instance, yesterday the big piece of news was that CoffeeZilla posted a video where he basically claims or exposes SafeMoon as a $1 billion fraud. And I think that those kinds of headlines, they don't have like immediate impact on Bitcoin, but I think in the long run, they kind of do. And I think that the concern that you should have in Bitcoin is still the concern of stronger regulation coming in, because it really is turning into, hey, there's nothing about the Bitcoin ecosystem that really makes it better from the regular financial system, except for that you're not protected by the government. That's what it's turning into right now, because they're pumping money into it, right? So it's not really getting you away from the inflation or Federal Reserve manipulation like it was originally intended, right? So I think that those kinds of headlines are going to impact it in the longer run. And so I don't know. There's a lot of things weighing on it, that they are still kind of treading water at 40K is actually very impressive, right? Mm-mm-mm-mm-mm. Well, I really hate it when my data feed resets like that, because it makes it harder for me to see what the range is. Okay, no, we're good. 119.13. Wouldn't surprise me to see us come back up to 16. One of the problems that I'm getting a lot of is that the treasury market is having a lot of sizable moves that I really don't have any ability to predict. So, good morning, MG. Your user profile looks familiar to me, but your name can't recall. See, this action here this morning. I don't really see any solid reason for it to be happening other than that there was significant moves by the Europeans overnight. So they're just reacting to that, I guess, and trying to go with the momentum. But where does that put you right here? Well, could probably move up a little bit more. I mean, the 30-year has retraced it. 5 hasn't. I'm seeing all of the spreads moving. I'm actually surprised that we come in here this morning and the 30-year is not at 3. I kind of thought that we would come in here and the 30-year would be at 3. Now, does that mean that we'll continue to see the rates rise? I don't know. Well, there is some iceberging right there at 13. Bitfinex is talking about something, but I don't know what that's a chart of. It looks like somebody, or that might be SafeMoon crashing. Patrick Rooney, have higher rates curtailed housing starts? No, apparently not. They've been better than we expected. I'm just reading through Twitter here, seeing if there's anything interesting overnight, as there often is. Ooh, they're smacking it down there. They pushed through the iceberg there, and they smacked it down. I mean, that's interesting, because when it was down here, I was like, well, I think that I would probably rather be long rates in this environment. If NASDAQ killer, you've been doing it for a while. That's up to you. I was saying, I can't really see your stats. You got to pull your stats out. Take your caps locks. Take your cap locks off, dude. I'm doing good. Look at that. That's crazy. I don't know if that's one that I want to touch though. There was some absorption on that. There is some absorption on that. So you got a really massive and aggressive sell coming through, and there is somebody absorbing it. But this is very much a situation where they could just blow through him, right? Oh, Supreme Court won't hear challenge to SALT tax deduction. Interesting. Scott Wapner from CNBC. Serious question for Jack Dorsey. If you think the Twitter board is/was so dysfunctional and kept the company from being great, as you imply, either through your own tweets or replies to others, why didn't you do anything about it when you ran the company for several years? And like Honor says, because Dorsey wasn't really in charge. Well, I don't know about that part, but it is really an incredibly interesting development that Jack Dorsey doesn't seem to be happy about what's going on at Twitter. So it's something weird. This just popped up on Twitter, and Nassim Taleb was tweeting something, and it was French. And I'm starting to realize that in the financial world, probably the second best language to know other than English is French. Seems like there is a lot of big developments happening in France, like hedge funds and stuff that are really good, and a lot of really good research happening in France. Them Frenchies, they smart. Well, I still see iceberging in the 10-year. The liquidity is just awful. Look at that. They downtick, and then there's only 300 bid. Right? If somebody wanted to hit the market with 1,000 lots, and I don't think that you would do that, but if they did, that would be a new low that easily. That's how bad the liquidity is. Despite the low liquidity, they are trading a lot of volume, though. They're trading a good amount back and forth. I mean, there was 10Ks at all those prices up there between 12 and 13. Now we've got over 10K at 119.10. They also have good wine. Well, I took French in high school. I don't know. I do enjoy learning about languages and other cultures. I find that that's really interesting. But it's one of those ADHD things. It'll go in spurts, and then I'll kind of back off. I'm having that problem right now with the financial advisor thing. Is like I did all of the reading and ready to study and start taking the test. I haven't been studying every day. It's been hard. It's been hard to motivate myself. If it was like, oh yes, Seth, if you take this test, then it's gonna take you to be able to do all of the things that you've ever wanted to do, and yeah, nah. It's kind of like, oh, I might take it, but I don't know if there's even actually a point of me actually taking it or not. So I'm not sure what I would do with it. Even with the other one is like take a series 3, but I don't know if that's a viable model. Like I think that what will happen with the series 3 thing is we will start a fund, but it'll be a super tiny fund and you won't make much money from it. Cuz apparently for that to be a really truly viable model, you need like 10 million 10 million under management or something like that. See, they're still absorbing in that area and playing. So I don't think that, I mean, it could slip through really quickly, okay? Let's just realize that. Could slip through really quickly, but I don't think that I want to make a bet on that. In fact, I think it would be a better bet to buy here. If well, let me put an order just out here just because of the way that the liquidity is going. I might be able to pull a tick out here. Let's just see. This is kind of dangerous. This is kind of dangerous. Ed Morrissey from Hot Air says Elon Musk should buy the Washington Post instead and hire me as personal director for just one day. I bet. I bet. Bank of America, we downgrade our forecast of China GDP growth from 4.8% to 4.2% this year in the base case and 3.5% in the bearish scenario. The key concern is disruptions from COVID controls, including full city lockdowns and mass testing rolling from city to city. Yeah. And we need to, now that we did that. Okay, so now that I'm filled, they're just gonna bomb down through the lows. I don't know. See that 09.5? It pulls and it looks weak. Excuse me. It looks weak, but they're not hitting it. It looks weak, but they're not hitting it. Oh, nope. That they might go. Yeah, it's always dangerous when you're trying to just get ticks. You're totally right. Well, I told you, I had said this one's kind of dangerous. Right. I'll just take -2 on it. It's fine. With the way that this, wow, really? Huh. Okay, so I can see off of this action that gold is getting hammered. Oh man, is there like something I'm missing here? Just because I find the urgency. Hmm. So I think the reason that we're seeing what we are is because the Japanese yen is like crashing. But it's really, nah, it was a sim. It was a sim trade. -2. That's the way that we should play those. It's awfully difficult to jump on this trend with the micros because of how much you have to pay up. And when it's trading like that, you got like a really good possibility of the trend continuing, but you could also get really strong pullbacks against you. Look at that. They just, I've never seen sellers so aggressive. Usually when we're falling down, it's kind of like a buyer's strike. So to be seeing sellers come in so aggressively is really taking down and putting back your entire trading session over 'em. Do you really take it apart and put it back together every day? Jeez, dude. I don't know. I feel like that this more and more this market is sidelining me. Okay, so there's something I just want to know. Now that we've kind of pushed a little bit lower, the liquidity is looking a little bit better, right? The liquidity on the center price is still pretty awful, but we're getting thousands on the outsides of these now. That sucks, dude. Well, how long is it going to take you to finish the room, though? Hope it's not very long. Like this move, by the way, is being incredibly stressful for the market makers. I can just see all of their numbers are getting blown out. Yeah, this move down, it's been like 25,000 contracts down. I'm very, very tempted for some reason to try and take um hero trade. I do think I can probably get, let's do it right there. Do you think that we can probably try our little one ticker in here again? But this time let's be on the right side of it, right? Already half done? Oh, okay. Y'all so much more diligent than me. I would get like, all of the major work done, and then there would be like detailing work, and I'd like never, finish it 2 years later or something like that. It's really rough. I really wish that I could focus on my personal projects, every day the way that I can focus on work, that I could just set that time aside for that. Maybe when when the baby is born, I might be able to make use of some of that time. The first room you did was like that. I mean, I shouldn't feel too bad because when it comes to home improvement projects, that's like the majority of people end up doing that, huh? The volume here at 06.5 has slowed down a little bit. So this may, I'm not gonna say it's gonna turn into a reversal because of that, but this market may be balancing out. The only issue is that, like, why the aggressive selling? Is it because the Japanese yen is getting creamed? And if it is, then we can't rule out the possibility of further really strong selling moves. And if I had gotten into this when I was first thinking about it, we'd be pretty happy. Waiting for a pullback in the treasuries these days has not been going very well for me, has it? 2000 into '06. No, like the volume is kind of showing me like this is maybe a milestone point where they might at the very least pause for a little bit. But then I come over here and I look at the 30-year yield and I'm like, oh, but they're not to 3% yet. I think they want to get to 3%. Catturd says I stand with libs of TikTok. Yeah, right. That whole thing is like it's so disturbing to me that all you're doing is posting videos of liberals, videos that are probably still open and everything, just videos of liberals being stupid, even though they don't realize it, and that gets you banned. That one was very, very eye opening. Well, not eye opening. I mean, we knew what the way this situation was, but it really just shows you how bad it is. Okay, 4K at '06. So this is the same situation as it was before, but maybe a higher probability of it holding this time, right? You're getting a big iceberg, so that could be something that could hold us and make us reverse a little bit. But we're in a situation where the market orders could very easily overwhelm the iceberg at '06, and then you can get a push through, and it could be really dramatic pullback, right? Yields are up, bonds are down, stock is down, gold is down. Well, if I was taking a live trade right now, I mean, it depends on what kind of a trade you want, but the treasury seems to be the most active thing right now, right? So for scalping or for day trading, I think you want to be in the treasury right now. Although you might have missed the best opportunities, huh? Okay, okay. I'll do that one again if they let me. Very good. That's what I was hoping the first one should have been like. I guess if I had gone the other direction, I really shouldn't have been buying it in that situation. But that wipes out the loss. The theoretical losses is all sim there. But I'm not so sure I want that '07 half one. All right. It does seem to me that the equity markets are reacting here. I'm not so sure you want to mess with the gold. Off of that last bit of action, probably the move in gold was probably the most significant, right? Oh yeah. The 2 year is seeing tons of activity too, by the way. Why is gold going down? Well, so gold does not do well when interest rates are rising, right? Gold does better when interest rates are weak. So it's actually kind of double worse because the dollar is strong right now too, right? So strong dollar, higher interest rates, very bad for gold. Although they are sticking around at 2000, so that's impressive. But what we continue to see in gold, what we've seen over the past like what 2 years, is it that it's just like if you're in the gold trade, you just can't catch a break. I don't know. It's like that with a lot of trades. Like another one that I find really frustrating personally because I own some of these is the small caps. Like yesterday, small cap stocks got decimated, man. It was brutal in this. Like the overall stock market was up, down, up, down, up, down, but the small caps got brutalized. That's very concerning to me. It's like I think that the majority of people. Well, I don't know if it's the majority of people, but I would think that of the all of the stock buying that we saw post 2020 from retail traders, there was probably a greater percentage of it in small caps than normal, right? So okay, so that's a lot that traded at '06 half. Um, the liquidity here in this area is kind of suggesting that we may have a liquidity hole here. You can certainly see it on the chart. I think you got to be really careful about trying to place a trade because of the liquidity hole, just because the selling was so dramatic. Also, like, what is the yen going to do? Who knows? The yen is coming up against like some technical support. So easy. This is like really dangerous. there's advantages and disadvantages to this, right? Because the disadvantage that you get is that this is like a really wild market, and if it goes through you, it could go through you like 4 ticks at a time, right? But we have found an area where there's a bit of a liquidity hole, and we're getting filled short, believe it or not. And then because the liquidity is so low, our spot in the queue isn't so bad, and we're actually able to pull ticks out multiple times. So you see that was, the first one was bad, but that was, I shouldn't have done it that way. But let's say that I had gone short, that one would have worked, and now so that's 3 or 4 in a row pulling a tick out. So that's pretty good. Just it's kind of showing that the liquidity is as such that some of these scalping strategies are actually performing as well as if you were a robot, because there's not 4,000 contracts in your way. And I would reiterate, now that we've come into this 06 area, the liquidity is better. I mean, 1,000's pretty terrible still, but earlier they were only putting like 500s up, so it's better. There's a new low, by the way. Just kind of, actually, is it a new low? Maybe it's just touching the previous low. I guess it's just touching the previous low. And so far, the gold, I thought, maybe gold is, you don't want to touch that. They're still going. They're below 1970 now. Breaking, Biden has reportedly told Obama he wants to run again in 2020. Why would he have to tell Obama? That's crazy. Okay, that's a new low. Got to be careful with that. The way that the liquidity is such that it could turn into another Bender moved lower, or it could revert back to 06 half. I don't know, man. There's too much volume on this. Man, the selling in the 5-year in particular is really crazy. I know. Yeah, that was Jack Prosiviec. I don't know why I still follow that guy, but he hasn't always been reliable. But that's an interesting story. It's useful. Let me tell you, it's useful to keep track of what story different political groups are following and with the way things are going. So I give you a good example. Yesterday, Andrew Yang was interviewed, and he was still all in on basic universal income. And he said, no, the inflation that we're having right now had absolutely nothing to do with the unprecedented amount of monetary and fiscal support that the US gave the economy. And when I went and I read the r/economics thread on Reddit, it was like a complete reversal of what you would have seen on a story like that even 6 months ago, but certainly like 2 years ago when Andrew Yang was more popular. And everybody was basically saying, like, he's got to be crazy. How can you have gone through all of this and seen what's happening here and still want to push basic universal income? At the very least, it's very politically unwise, because the American public is very concerned about inflation, which is absolutely correct. It's just like the Le Pen thing. It's like, maybe you really believe that, and now is not the time to be saying it. Now is not the time it's just going to make you unpopular, right? But Andrew Yang has never been one to have a very good tab on what the people are doing. I don't think that he would make a very good president, to be honest with you. Maybe he's good at running companies, but he just doesn't have the political skills. He's tone deaf. He's come across an idea. He's enamored with this idea, and he can't see the bigger political picture, UK and record numbers are canceling online streaming services due to inflation. Yeah. And the inflation in the UK isn't nearly as bad as it has been in the United States. So that's interesting, the iceberging there at oh 07. Looks like they blow through that pretty easily though. We may be getting a short-term reversal. Hold on, the IMF is saying some stuff. Anyways, the I think that one of the things that we're seeing go on here, I think that the lockdowns in China is a really significant factor in that it kind of becomes the straw that breaks the camel's back, right? We've been in a long-term deflationary environment for a long time, and there's been a lot of things in the interest rates markets that suggest to me that the interest rate market believes that that longer term pressure is still there. I think that that's a major factor behind why the longer term rates, like the 30 year, haven't haven't been exploding at higher as that you haven't been getting seeing steepening essentially, right? Because there was a point where we felt really strongly that we should see steepening, right? Well, it's you're not seeing it, you're seeing flattening because they think that either they're gonna create a recession or that regardless, we're gonna move back into the deflationary regime. But now what's happening is, yeah, we definitely saw some inflation, I think from the monetary stimulus, which what is the thing that I find so interesting about that, by the way? I know I'm being ADHD, but for the libertarians that really hate the Federal Reserve and everything, they're saying, they're creating inflation. Well, if that's what's creating the inflation, that's a transitory pressure right there, right? Because all of the government support is dried up now. But I digress. So now what's happening though is we're kind of in this inflationary area where, because we're backing away from globalization because of what Russia and China is doing, that's kind of inflationary, right? So then you throw on top of that lockdowns in Shanghai. Now it's like, okay, yeah, the inflation that we think is transitory is probably going to continue to be transitory, not transitory, because that just means like another year or two of supply side disruptions, doesn't it? You know, like we saw what happened last time around, right? The disruptions didn't happen until months and months later. And so you can see the disruption, all of the boats waiting in Shanghai right now. That's another strong push down. They didn't really give them very much of a pullback at all, did they? I'm just thinking about if I want to just give in and just hit into it because, at 20 at 2.92, I wanted to go long, but I said, no, I shouldn't hit into that price. And now, of course, we're regretting it, right? Okay. Anyways, so now it's like that's going to last a lot longer. And then that's just kind of on top of everything else that's going on here. Yeah. Although I'm not sure that that's necessarily what's driving the treasuries today. I'm pretty sure that it's the Japanese yen. By the way, on that further push lower, the Japanese yen took another big dip. So we need to come back and look at that. Oh my gosh, that's not even useful. Not helpful. That's a chart of the Japanese yen. The yen is just getting decimated. Gold is selling again. Yeah. They touched 1960. Maybe kind of backed up. Here's another opportunity for a one ticker. But look, the further down they go, the thicker the liquidity is getting. So that's good, I guess. This is wild stuff, really. I'm yapping my head off, but the reality is this order flow is some of the craziest stuff we've ever seen. I mean, it's not quite like non-farms number was positive when it was supposed to be negative or something like that, but for just like an average day, this is nuts. And look, I'm already having to pay up another $5. Okay. Well, that was a really big iceberg at 04, by the way. Yeah. I'm just going to mark that here just because I think that's probably going to cause some issues. That's a little bit of a tear in the fabric here. I wouldn't be saying like, yeah, we gotta I can go for a reversal here because again, like the Japanese yen could just crash further, right? What do we know about the Japanese yen and how far down the Japanese yen could fall? I don't know anything. I think I need to see a longer term chart here. Hold on. One day. Oh man, even if I go back to 2015. Okay, what if I go into weeklies? Oh boy. Okay, so if I come over into weeklies, I can see that these are some of the lowest levels since 2002. Jeez. Okay, that 04 is serving as a liquidity hole. We could see some of this flow reverse. Hard to say how high up it can go here, right? Japanese yen is coming back up with it as well. The equity market hasn't been, well, I mean, it's been moving on it, but not too dramatic, but they are headed down. $5K in 20 seconds is like so a lot of volume. Like that was a really dramatic move. Well, they kissed 3%. 30-year kissed 3% and then before things backed off. No, they're not going to come all the way back up to 6.5, huh? I don't think their housing market is doing too well. Well, where do they go from there, right? Yeah. Oh, I did not know that. So the Market Ear has an article on this, but I can't read the whole thing. I should have put my subscription money into Zero Hedge instead of Bloomberg, but they weren't posting very much content from Zero Hedge. But then it's always like where that Zero Hedge where like I can't read something. When a huge asset class, third most traded FX globally, moves like this, you need to pay close attention. Yeah, right. So one of the things with Forex is that, Forex is kind of the most difficult to see what's going on, right? That's why I think that Forex traders rely so much on technicals. And there can certainly be like, support and resistance and correlations of sorts that can have a lot of staying power. But then you'll get these big moves like this. And how do you know where it's going to go? Because we're not privy to that order flow. If you were on a Forex trading desk, and my understanding is that the foreign exchange desks at the banks are some of the most intense. Maybe you might have some insight into that and how much is going to move and so forth, but as it is right now, no. But that's a pretty solid pullback. That's a pretty solid pullback, isn't it? Very fast pullback. Would you say the same? Yeah, I mean, because it's still, you can see the volume for sure, and that can help you in the future, but it's just like with the S&P 500. When you're a derivative, and the thing that you're a derivative of is so much bigger than the order flow in that stuff kind of becomes of questionable utility. It's just like in yes, you can have these situations where they sell in the futures, and the price just continues to go up because ultimately it follows the index, right? Treasury is a little bit different because from the studies that they've done suggest that price action happens, or sorry, price discovery rather, primarily occurs in the treasuries. And so when you're watching the order flow in the 10-year, you're really getting a really solid idea of what's going on. And it's extra so for stuff like oil and gold and stuff. Gold might be a little bit different because there's a lot of larger exchanges that trade gold than the CME. But for oil, it's particularly important, right? What's Nassim talking about here? This word is a confrontation between two systems, one modern, logicalistic, decentralized, and multicephalaceous, and the other archaic, nationalistic, centralized, and monocephalaceous. So now the question has to become, is that the pullback we want to go short again? Well, the volume is still in favor of it being a sell, but it's really hard to pick a spot, right? Being here in this 0808 half area is not too bad, though. Not too shabby, I would say. Hmm. And I find it curious that the liquidity was so much heavier down here in '06 and up at '08 oh half. Sorry, '08 to '09. It's a little lighter. Looks like oil is getting hammered here. I don't think that the action we're seeing today is like rate apocalypse, but it sure is scary, ain't it? I don't know why I still have that screen up. Should be able to see my face. You know what? I got this new air filter and my eyes haven't been runny at all today. Hmm. Yeah, so you can kind of see like that 0808 half was a little hard for them to get beyond that because of the liquidity holes below them. I was hoping to get 915, but they didn't really give me an opportunity to do it. I could do 92, wouldn't be unfair, but it's not optimal. So with the Japanese yen collapsing, do we have to be concerned about bad things happening in the Japanese economy? Like there such a long period of monetary easing and everything going on for so long, like really harming the Japanese economy here. And that's a large offer there at 07.5, relatively speaking. So now we're on the bottom end of that. Let's see if it's the same thing at the bottom. Because you've definitely got some liquidity right here, right? But because of how fast we came back up, the liquidity through here might actually be relatively low. Right. And it looks like that is actually the case. But it could still kind of snap back up to 06 half. I think you would have to see a little bit of people trying to buy the dip here for it to get back there, but let's see if they do it. I mean, 942 isn't bad. I think that we're totally in range. Yeah, the VWAP held. I don't really think it had anything to do with the VWAP though. I think that one was a little bit more of a coincidence. There may be something too that VWAP tends to settle right above a large liquidity hole like that. That might be possible, but I really think that it had more to do with the liquidity. It's awfully hard to be calm here during all of this action because there really is some wild stuff, and I didn't really take a trade. I could have taken it. I probably should have taken a short much earlier, but like I don't want to buy 925. If they filled me in 92, fine. Yeah, it's okay. I mean, if it's when it's moving like this, that means that we're gonna have plenty of opportunities to trade it, right? I mean, plenty of opportunities to trade it today and probably plenty of opportunities to trade it this week. So we should really wait for one where we really feel confident. I think in this situation, it's like we know why it's moving, right? We know that that gives the potential for it to just keep running down and down and down and down. But then we also know how to read the liquidity, right? So we should be able to pick some spots. We might need to be might have to go out on a limb a little bit more than we want to pick a spot. But what do you mean by why did it go down through CN? So let's just walk all the way back through the whole thing. Okay, there was some aggressive action in the interest rate markets in the European markets, which my understanding is were like on holiday Monday, or at least less volume on Monday in Europe. So when the interest rates kind of lit up, they started selling hard. And then we started to see large moves in the Japanese yen. So this move that we've seen here this morning has been accompanied by very, very strong down moves in the Japanese yen. I mean, really, when you come and you look at the Japanese yen chart, man, like look at that. That's just ooh, that is such a scary chart, man. Let's pull it out a little bit so we can see it. Now you can see what's going on in the Japanese yen, right? That's what's moving us. Okay. So we want to go short. If we're gonna do something, we want to go short. Now it may be that that was the move and it's done for today. That's a very real possibility. Okay. But if we are going to take a trade, given that framework, you really want you want to go short, right? So what are some things that we know that might help us get a better short, right? Well, we know where the liquidity has been. So we know that the liquidity below us at '06 is probably a little weak because we moved through that very quickly. Um, there are some areas that were weak on the way down, but there's also a liquidity hole at '07. So that liquidity hole at '07 has made it difficult for them to get above the VWAP. So there at the VWAP is probably a good spot to try and open a short. I guess I could just put an order over there to see if they do it. Where you take it in the interest rates is a different matter. You can notice here in the micros that when they get to that 15 that the spread is tightening, right? So I would expect to see a little bit more we'll have to trade for them to get through '08, '08, half '09. Normally the bonds, no, because the bonds are very heavily correlated with the 6J. Bond and 6J have a strong positive correlation. 6J goes up, bonds tend to go up. 6J goes down, bonds tend to go down. It's a difficult situation in the bonds in that if we think that there's going to be a recession, you would want to buy the bonds, right? But in this situation, um, it's pretty clear that the Federal Reserve is going to keep raising interest rates until they get to a neutral interest rate. So, okay, so that filled. I mean, in a high interest rates. Well, remember the interest rates are opposite of prices, right? So that's what I was a little bit worried about in just trying to put a limit order out there. Yeah, well, they got above the VWAP. You can see there is more liquidity there. Now that they've kind of gotten through that liquidity, though, you've got to be worried about this stuff going up to 13, right? Like it might be, there was a little bit of liquidity there. This area right here might be light, but then the further up you go, probably the more there's going to be. It's curious. The market orders there were pretty strong, right? The market orders there were pretty strong, but when you look at cumulative delta, the cumulative delta is pretty much flat through this whole pullback. Well, they're still showing me 2.915. Yeah. Oh, the I forget, was it the IMF? They were saying that because some of the central banks have policies that are different, you're seeing big realignments in currencies, and I think that's what you're seeing here in Japanese, because Japan continues to be the weakest policy, right? Or should we say weakest? The most dovish policy, right? That's why their currency is just cratering. So nobody wants to have their money over in yens because you can't get any yield there. My question isn't why bonds are going down is because people are no. The reason that bonds are moving down is because people know that interest rates are going to rise because inflation continues to be sticky, right? Iceberging at 03 off of the uptick, huh? Okay. Yeah, it's really kind of that kind of trade. Nasdaq trader always screws people because when people get scared of things, they usually buy bonds, right? They usually will buy bonds. The only situation in which we would think that you wouldn't see them buying bonds is they really think that the United States is on the precipice of imminent collapse. Otherwise, scary things tend to move people into bonds and into the dollar. And there's a lot of people that try to take ideological trades that, they always get screwed on that one. Probably not very many people make that mistake anymore, but I remember some people trying to sell bonds in after 2008 and getting screwed. Well, that's kind of why Mohammed El Rain is no longer the president of PIMCO, right? Okay, so you're still seeing, even though there was a decent amount of buying there at 08 and on the bid, he was doing it with an iceberg order, and now it's kind of subsided. They fell back down through it. I wanted to maybe hit into 9.5, but I didn't quite see the right spot to do it. I could have put a bid out, and maybe it would have been filled. I'm still a little weary about it, though. I suppose that hitting into 9.2 wouldn't be terrible. It's not your area of expertise. Well, you should. I got to tell you, man. The more you understand about the bond markets, the better, right? That gives you so much of a leg up everywhere else. So just remember, scary things tends to mean interest rates lower, bond price is higher. Unless the scary thing is inflation. Oh, we just have the E-mini open there? Okay. I wonder if we're gonna get this thing in the E-mini again where it's like they open as a buy and then they fade the rest of the day. What's this FX macro? The fact that equities have held up so well with this move in rates today suggests they have bottomed. No more sellers left and could start a decent rally. Same with crypto. Well, that may be the case. Um, the equities seem to be a little bit less attached to what the interest rates are doing. Hmm. And if equities hold here and eventually end up moving higher, probably the correlation with Bitcoin could drag Bitcoin up with it. So a lot of back and forth here in this area between '07 and '08. And I was like feeling really anxious about trying to take a trade in here. But now that I'm seeing so much back and forth, I kind of view it more as um, a liquidity hole area where I probably shouldn't be too anxious to take a trade because we could be stuck in here for a while. I think I would still rather get the lower end of that range. Like I would like the treasury to be at '08. On this one, I probably should take more multiple orders. I don't know if they'll ever give that to me again, but hmm. So I think for me to have gotten filled here in the micros, I would have had to have been sitting at 9.5. E-minis not looking so bad. Just remember that it was, they were getting as high as 44.10 at one point. 4,400 would be great though. That kind of reloading there in the E-minis. Positive. It might be the top. I don't know. I'm just going to keep that so I can keep track of it. The DOM that you're looking at on Jigsaw, does NinjaTrader have that as well? So NinjaTrader does have a DOM, but it's not very good. Their DOM looks like this. That's Ninja Trader's DOM. So it's not as effective. So that's kind of why you get Jigsaw. It used to be the way that Jigsaw started out was an add-on for Ninja Trader. So hmm. Man, it's really easy for them to go off at 06, ain't it? When you look at the move in the treasuries, it's like, maybe that's the low of the day. They might eventually try and dig it out here. Probably be stuck in this area for a while. When you look at it in the 6J, it's like, they might turn down for another leg and we could have another measured move lower. That would be so ugly. Ooh, if the yen actually moves lower today, the degree of that move would be so insane. I don't know if you can, if they have it in them. Well, I wanted to have two so that I could take one off and then go for the lows, but I'm starting to become a little bit, all of a sudden, I'm starting to feel a little bit less confident about them going back to the lows. So all of these DOMs are Jigsaw Day Trader, right? If you go to the main channel page, I have a video about what trading software I use. Yeah, on the one contract that I took, it was well positioned. I think we read the liquidity up here really well, right? Like you can see it. Do you see where I'm like the volume profile is not always good tell you everything that you need to know? Like it's really good at telling you where the majority of the volume traded, and that can indicate a liquidity hole, but you can actually see these liquidity holes really before they form, right? And then yeah, it was a scalp trade. Well, that's what I was saying. On this sim here, I really wanted to buy 9.5. I never quite got it the way that I wanted. And even if I was, I would be thinking of taking it off at 9.3. So I didn't take a live trade. But anyways, you're distracting me. There's a liquidity hole here. And then you could see when they got up here to 08, there's more offer liquidity up there, right? When you get below this area from 05 is starting to build up, but it's a little bit less because we visited that area more recently, and when we went through it, we moved down very quickly and back up very quickly. So the number of orders sitting down there is not as much, right? So what happens? You bounce around in this liquidity hole. If I'm going to take a short, I would rather get the higher end of the liquidity hole. And that's what I did. And then in that instance, because I'm not confident that we're going to move down to the lows, really the 6J would have to move lower, I think, for us to do that. And it's moved so far. If it moved lower, it would be an extremely unprecedented move. So I'm a lot less confident that the 6J is going to move lower. That's why I decided to turn it into a scalp. Take it off early. Right? That's all. But we should just note that if they're able to push through this liquidity down here at the bottom, there's a good chance they could slip down here to 03 and maybe even make new lows. And it will be a slog, but there is a point at which they get high enough up here that they could slip a little bit higher and move back into Where the hole was at like 12, right? Well, 10 and 12, right? And that's how you try and use the liquidity to make your trade. But you note that all of that is very dependent on me knowing why it's moving, right? When I have the independent. So the only difference between the three different versions of the Jigsaw platform is the education that they give you with it. I really feel that the education they give you with the independent is just fine. So what I would do is I would get the independent, and then if you feel like you're just not understanding what order flow is or something, and you really like their material and stuff, then go and buy the professional course, which you can get separately. What happened to, well, so gold is moving along with the Japanese yen and interest rates right now. So anytime that you see a really strong move in interest rates, it tends to harm gold. Gold has been more correlated to the current interest rate than it has been to inflation, unfortunately. Unfortunately, for anybody trying to hedge their portfolio with gold and silver. So, I guess another thing that we should point out just in the current conditions is that there is very strong autocorrelated sell flow in the treasuries here, right? So the market makers could hold it and it could go sideways in here, but I don't think that I want to be trying to go for reversals today. The reversal that you could have caught down here is done. Okay, why do you still use Ninja? So the reason I still use Ninja is because, well, first of all, Ninja's charts are better, and you've got like a much larger ecosystem for custom stuff. Um, and I can program in Ninja. Um, I, I think that Jigsaw will eventually get those features. They've been talking about stuff that sounds to me like it could be custom indicators, although they've been really vague, so we don't really know. So there may be a point in the future where I ditch NinjaTrader completely and I just use Jigsaw, but it would have to allow me to move some of my custom indicators over into their charts, and it would probably need to allow me to pipe the data out into Python because I'm working on some machine learning stuff. Okay, so we read that as well. When they got to the bottom of the liquidity, they weren't really willing to push it. That has caused them to balance back up higher. On this move back up, you can see where the amount of volume was the same, but they were just able to push through the liquidity hole really quickly. There's still going to be some offers here at 09, 09 half, but the way that that moved might make it more likely for them to bust through. But if we want to go long rates here, they might be giving us a spot here. The S&P 500 is still looking really good, isn't it? It's not a super strong change in cumulative delta, so I think they're still working it out, but so far that looks positive. The stop runs, well, them coming back up as fast as they did, because there wasn't that much volume attached to it, so it probably has more to do with the liquidity conditions than anything else. Surely, if we came back to the bottom side of this range and fell through, it wouldn't surprise me to see a sort of false breakout where they make a new low and a bunch of people get stopped out and then it snaps back up. Okay. So that's what I was waiting for it to do before, but kind of think that you might get more volume come through here. So no. The Japanese yen seems to be holding just fine. The dollar did have a little bit of a move lower there. Okay, yeah, that's more like what I was thinking we might see. Wow. The move down in crude has been $4. Oh yeah, it's pretty ugly. But I mean, on the 14th, we had a pretty good run up in it. So, but crude below 100 might get interesting. Crude below 100 might start to be might be seen as a signal that um, a global recession is viewed as imminent because of China, right? If Eurobond can lift view up, then the buyer will come in. I'm not. I'm not. I don't see okay. So when I look at cumulative delta, seeing the cumulative delta snap back up, like let's say 10K even, might be a huge ask. They are building this area out in '08, so they might be able to move a little bit more freely through here. But dang. So you see exactly what I'm talking about. Like they're just gonna get sucked. They just get sucked back into the hole. Does look like there are some buyers in there though. At least at 07.5 there was some buying. Could probably get 5 from all of that jostling around. Something we should note is they're being there at 16 in the ZB, and that's kind of been a ceiling. So it seems like the ZB might be one of the things holding us back. Hmm. Little uncertain where they're gonna move to next. I think that we may still be in kind of like, well, so if there was going to be like another leg of meta order selling in the 6J, they could start it now, right? What's your opinion on trading ES? It's super hard. There's a lot of differences to it, right? Um, it's a little bit harder to read what the liquidity is in ES, and it doesn't matter as much because the indexes are going to move it anyways. The price movement is a lot more random over in ES. So the huge order yesterday was a good tell for today's price action. Maybe. I mean, it's definitely continues to tell us that like the bond market is just in crazy mode, right? I had some opportunities to go long at 9.5, but I don't know. For some reason, when it gets up there, I'm a little bit weary about it. Hmm. Well, that wasn't quite what I wanted, but I'm seeing a little bit of aggressiveness in the ZB here, so I might just keep this on a short leash here. You definitely seeing the volume in the 5-year. This is probably a situation where having the 2-year up would be more useful, huh? I don't really have a room on it. You know, I could get rid of the micro ES and then put it up. ES still looking good today, huh? Where does that put them on a relative basis? Okay, so it is above yesterday's highs. Next kind of interesting area in there is maybe 44.30. Just quite a ways away, so. Now thinking about trading ES, I traded it for a long time because of the micros, right? When the micro treasuries came back, I was like, oh, I think I would much rather trade that. But We did it for a long time. I had a period of I've had periods in ES where I was massively successful, and then I had periods where it was just dismal. So I find it curious that everybody tends to gravitate towards ES because that seems to me to be a place where it would be harder for a retail trader to gain an advantage. If you're trying to do noise trading, then sure, because the ES moves so much. But in terms of being able to actually predict what it's going to do in the next 5 minutes, super hard. Super hard. Okay, so the flows in the treasuries continue to be negative here. You do see, or like we were saying, once you get below 06, there's going to be a little bit of buy side liquidity to get through. Japanese yen is kind of heading down though. This might be a second leg. Given how strong of a move it was, you would have to be on the lookout for another leg, right? If another leg does come though, it might be a little surprising. Like the order flow over here in the 10-year might look like it's holding, and then it just snaps because it's the 6J correlation that moves it, right? We should also be on the lookout for the buyer strike kind of move where they move lower and there's not that much volume on it, but it's just all of the bids just pull out of the way. Two scenarios where we could see the treasury get dragged down by the 6J correlation. Well, they're nibbling at 04.5. S&P 500 doing well there probably helps. Okay, yeah, they trade through that. 04. There was a big order at 04 that basically pulled, but normally you would expect 04 to pull, right? Like there would be 200, 400 there. It's not. So that's still that resting liquidity a little bit that you got to get through. I feel like I'm saying too much, but I bet you guys find it really useful now. Okay, back tick. The 30-year, they touched the lows, but they did not trade aggressively into 06 yet. Would not take very much, would it? ES continues going up there, man. I don't know. You think they're going to make it up to 44.30? I should have done this with tons of contracts, but I kind of got sick of trying to use a bunch of contracts in MES, even though it was just for fun. Okay. There is a new low in ZB. And that also means they are now solidly above an interest rate of 3 in the 30-year at least. we are, by the way, as we're seeing this as that happen, we are seeing accelerating sell volume in the 10-year. Yellen speaking. Talking about global inflationary pressures. And are we seeing? Okay, no, we're not. So all of the treasuries are basically at their lows now. But the 6J is not. You can remember this right here. In between there, that's the 6J. Right there. So the 6J has not followed it yet. It looks like they got sucked back a little bit there. Yellen says early estimates suggest at least 10 million more people worldwide could be pushed into poverty due to higher food prices alone. Hmm. Well, that was a pretty good move down lower in the 30-year, but they appear to, for now, coming back to the scene of the crime. And like I said, the 6J did not go with it yet. Yes, just chugging along. When I said 44.30, I was like, oh, that's awfully far away. It's too early to be thinking about that. That was only like 5 minutes ago. Right? I'm just going to leave that out there. What's Anthony saying? The market trains you to fade intraday moves because we've been in a two-way trade and then in a flash it's a one-way market. Not saying that's what's happening today, but this market environment I can see it flip-flopping a two-way days to one-way days. I want to comment on that. Okay. So they gave me the $10 that I wanted originally. I might miss out on it going lower, but at the moment it seems like these liquidity holes at '04 and '07 are making it very difficult for them to push lows. Let's see here. News squawk. Seen chunky U.S. Treasury selling this morning, led by the front end and belly after last week's steepener flow, aided by the surprise rise in U.S. housing starts to a pace not seen since 2006, adding weight to Bullard's hawkish comments on Monday. And then they've got a further note here. There was a slight pairing of London's losses and T-notes as U.S. participants returned. That proved short-lived. A pickup in curve flatteners accompanied the move higher in belly yields, with several blocked buys in 2-year futures against sales in the ultra bonds. These blocks came both before and after the unexpected rise in U.S. housing starts. Okay, so that's a really important thing that we missed, right? The housing starts being good. We did see that they were good and everything, but that may be a larger factor behind the movement that we're seeing than we maybe initially realized. Okay. A pickup in IG dollar supply also added rate lock related swap paying treasuries selling. T-notes found fresh lows at 119.02 and cash 10-year yields fresh cycles high at 2.92, with losses at the front end more pronounced as the 2-year eclipsed 2.55, not far off its cycle peak of 2.6 from April 6th. And the session ahead sees Fed's Evans at 12 Eastern Time, while rates traders look to Wednesday's 20-year bond auction. Okay. Ooh, that's a critical thing to point out. Okay, so the 20-year auction has kind of been the favored one. So tomorrow we're going to have to be careful about that might be, if you're going to see like a pullback or a retracement or whatever, or move higher in treasuries, that might be a time when you would see it. But we could also see a continuation of these moves because these things are just getting beaten down. So tomorrow could make tomorrow a more difficult trading day, huh? And you can see there, at least in the short term there, I did getting out there was probably the right decision. Although obviously I could have done much better if I had gotten the 2.915. I didn't have the balls to do it when I did the first time. But look at this. When you add that and the sim trades that I did today, like that is incredibly nice looking profit loss screen, right? 4 win tickers in a row. 4 win tickers in a row and a scalp in the 10-year. Well, let's not call it a scalp. Let's call it a short-term trade, short-term swing. And then picking the direction in ES, that one I think is mostly luck, and then catching a small trade on the live account. I really wish that I had gotten more on the live account. We really could have gotten, well, what could we have gotten? Oh, it actually wasn't that dramatic, but we could have gotten maybe $30. So looks good, doesn't it? Doesn't it? I think, you know what? But it's been looking good for the past 2 weeks. I've been on the ball lately, so I feel good about that. Let's hope that they don't turn around and start trying to screw me at every trade again. Because I mean, what was it? 3 weeks ago where I had 20 losers in a row? That was not fun. We still haven't quite recovered that. Getting close, but we haven't quite recovered that. Yeah, that liquidity hole at 06 is awfully deep. Okay, so I'm gonna take that trade in ES off at 30. It can totally go further. It's just it's a good spot for the kind of winner I'm looking for in ES. At least with one contract. If I had multiple contracts, then maybe I would take some off there and try and see if I could get it to run, but I don't know why I didn't feel like doing that today. Well, I know why I didn't feel like doing that today, because I tried doing that the last 2 or 3 days in ES and it not working. So I kind of started to be like, let's stop playing that game. It's not fun. Okay, so let's look around here. Okay, yeah, tick up at 06. So that last move lower that we made money off of in the treasuries, I think it was curious because it was way more pronounced here in the 30-year, right? It was much more strong in the 30-year. The treasury, the 10-year basically came to the lows and bounced off of it, whereas the 30-year extended new lows. And the 6J is still, still going sideways. So, man, that looks awfully nice in ES, doesn't it? I think that we need to pull up a larger view of the equities markets here. Okay, click it. There we go. I clicked it. We should check up on what Twitter is doing, what the small caps are doing, etc., because that is just awfully good looking action there. Not seeing much new news coming out. Cyber attacks pose existential risk to colleges, and sealed one college's fate. Did you know? I got to tell you, you want to be in the cybersecurity space. A cybersecurity incident, the stat is like your business fails within 2 years after that. Like small businesses, like a cyber, you would think that a cybersecurity incident would be not necessarily be a huge deal for a small business because they don't have a whole lot to lose. But apparently this sinks a lot of small businesses. Okay, well, what I'm seeing here already is not necessarily what I'd like to see. So yeah, metal's getting hammered, of course. Okay, so we are seeing a little bit of a recovery for the small caps, but it's not very good. In all honesty, it's not very good. So, yeah. If the S&P 500 really starts to rally again, we have to come back over here. Look at like a daily ES chart. Okay. So if the S&P 500 starts to get above 4450 and starts making a run for some of these other moving averages and they get above 4500, I think that you would have to see some of those small caps reverse significantly. So, no, I didn't invest in an NFT. No, that's the small caps I've got. I've got like 2 or 3 small caps that have high betas and haven't done very well the last week. So my portfolio keeps oscillating between $6,000 and $7,000, and I would really like to get above that $7,000 threshold, but it just hasn't been happening. Gold, the banks, which is the majority of my portfolio, is being in the bank, has helped, but yeah, the small caps have kind of been lagging. I think that some of it, that's a good move down there in the treasuries, by the way. I don't think I want to participate on that at those prices, but that gives me a little bit more. I mean, you can see how there's still a bit of a hole there at 04. They may be switching from, okay, the hole was really right there to now the hole is really right there. But it's the 04 is still kind of sucking them up. But there's a lot more volume down in here for sure. I think. Okay, so anyways, I said everything I need to say about the equities, right? When I look at these bonds and everything, so I'm still not seeing this 6J do anything. I'm also not seeing movement that really strongly suggests the second leg of meta order. And it's been so long now since the original move. So that original move that was about 30 minutes and now it's been well over an hour and 15 minutes since that first leg. So I think that that expecting other legs of the meta order, I don't think so. If we do see other legs, it will just be the 6J having a technical breakdown, which I think is slightly less likely to happen now. So even though we might push lower, I don't think that this would be a time where I should really try and hold it and try and get $50 and stuff like that. Probably missed that opportunity yesterday, right? So what we're seeing in here is more balancing. So that's probably what we want to trade in the treasury, is just provide some liquidity around the edges. Make those guys that are trying to take profits off of this move down, force them to have to give it to you at 07, right? Something like that. Oh, what? The Minecraft movie is being directed by the guy that directed Napoleon Dynamite? That's hilarious. With Jason. Did you guys hear about this? I didn't see a whole lot of like social media buzz about it, but I saw the story. I was like, "What? Jason Momoa to star in a Minecraft movie? This isn't like an April Fool's Day joke. No, it's the 19th, guys." Well, it's just as crazy. What was the other one that was going to star Chris Pratt? That we were like, what? Oh yeah, it was Super Mario. They're making a Super Mario movie with Chris Pratt. I was like, what? that one's going to be interesting. You know what though? It's the entertainment industry is so weird because in some respects they just keep getting worse and worse and worse. Like there's so many movies I've seen that like were just like dismally bad. But then there's also the ones that just get better and better and better. Like the new Batman movie, that was amazing. That was amazing. Do you advise to use a Kraken? I would not. I wouldn't. Listen, if you're gonna do futures trading seriously, at some point you're going to need the support and the new, you want to take advantage of the new features and things like that. So if you're really gonna go into it, you want to spend the $400 or whatever it is. And note that if you use the affiliate link that I have in the video description, you do get $100 off, and the channel gets a commission. So I would do that. And if you can't afford that, then what I would look at is just some of the cheaper competing platforms that you get from the different brokers. Like, for instance, if you go to Edge Clear, they have Edge Pro X, and that's a fine platform. I mean, I don't think that it's even nearly as good as Jigsaw is, but it gets the job done. So, you have a stupid question, Lucas? Okay. You have not. I'm really interested to see what kind of a question Lucas has that is a stupid question, because he has always been a very, very bright guy that doesn't ask stupid questions. So JP Morgan is tapping the US investment grade bond market, the latest Wall Street bank to follow its earnings report with a self-led debt sell. That's interesting. Okay, within the recon tape, okay, block bids are orders that hit into the offer. Yeah. If you see a buy order, then that means that it was. And block ask orders that hit into the bid. So ask equals blue, bid equals red. Right. Well, so let's just remember what the recon tape is trying to show. Okay. I'm going to make this super complicated because I know that you know a lot about this stuff and that you can handle it, right? And I think we talked about it before. You would think that the way that this works is you see an order and it says, okay, you bought here. Somebody came in and they did a market order and they bought all of this up. But that's not the way that it actually works. What it shows you instead is it shows you matches, and the matches are aggregated by the limit order. So if there was somebody came through and bought everything that was sitting at 05 half, right, with the market order, what comes through on the data feed is actually all of the limit orders that were filled there. So if there's like 500 different limit orders that make up that 1,000 that's sitting there right now, you would see 500 orders come through, right? So the way you can see this is if you come over to Jigsaw and you go new, and then which one is it actually? It's been such a long time. TNS, times in sales. Okay. So when you see it over here, times in sales, and we're looking at ZN, you notice that almost all of them are like single orders, right? And what you see here doesn't match up with what you see on the recon tape, because what it's doing is the way that the data comes to you is in like the most useless form that you can get, because it shows you what the limit orders are. So what the recon tape is trying to do is it looks at when the level 2 changes and the timing of the orders to determine when all of those fills were actually all caused by the same market order, right? So when you see a block order in the recon tape, a big blue block order means that it was a really large market order. That probably, and usually those really large market orders are like sweeping everything that's being offered at a price, right? I should probably modify some of my settings over there, because you don't really get very many big orders anymore. like a 3,000, 2,000 to 3,000 block trade. And you don't see that very often. Well, let's change my size filter to be 1,000 instead of 1,500, because that will show me when they're sweeping prices. What means a block beta or a black ask? Yeah. So in Jigsaw, all block means is that it's an order over a certain size. They're really misusing the word block. Really, I don't think that we should use the term block in that manner. But what else are you going to call it, right? Just think of it as a large market order, right? Well, with any of these, you want to look at it and say, like, so here's the other thing, because it's really easy to get stuck in this world of like, okay, but they bought 1,000, but that means that there was 1,000 limit orders that were placed, right? Well, just remember that the informed traders tend to use market orders, and the market orders tend to move the market, whereas the people that are using the limit orders are usually trying to make money off the spread. I mean, that's obviously not going to be true of every order, but on a whole, that's largely how it goes. So the market tends to follow the market orders. When does it not follow the market orders, right? Well, if market orders and price were 100% correlated, right? They always followed in lockstep, step by step, 100% of the time. Market makers would be screwed, right? How will market makers make money in that kind of a situation? The market makers kind of have to make it easier for the price to fold back on itself in places in order for them to ever stand a chance of making money, right? That's one of the things that they have to do to deal with the informed trading that will come in, right? That's why market orders and price aren't 100% correlated, right? So that's kind of some things that you can use to kind of try and interpret the tape, right? So you're going to look for liquidity holes. You're going to look for those places where the market makers are so strained that they don't really want to put a whole lot of volume, liquidity in that area, right? And then if we had a really strong move down, uh, it, it's probably going to have to fold back on itself because the liquidity behind the move is going to be lower, and the market makers will intentionally not put orders there so that it will come back up to where they do have orders. So that it basically the market orders diffuse into the liquidity, right? So what it will do when it comes down into an area like that, what it's going to do in here can be like super random. But if you know that the liquidity is that, it's like this, woo, right? Then you can make a lot better decisions. I'd love to get to know how they are interpreting the incoming data, because it is, as you said, an interpretation. Well, a lot of it is going to be situational, right? So here's what I would say is that generally speaking, those large orders are going to be very indicative of what the current price trajectory is, the large ones in particular. Okay. If you start seeing if I came in here and I saw like 3K sell, 3K sell, 3K sell, and it's still holding, that's extremely unusual. Might be worth taking a reversal. You're probably never going to see that one. Right. That's like a once in a lifetime sort of happening. Right. Because again, just think, informed traders prefer to use market orders. Right. I think that it's something like 60/40. Like if you're executing block orders for a bank, so you had to come in today and sell treasuries, right? You're going to do 60/40. But once people start realizing what's going on and it's trending in a certain direction, I mean, you saw it with the trades that I was making, right? Like getting filled on the offer is really hard. A lot of these situations, they never traded anything there last time they ticked down, right? So they're kind of forced to use market orders or they're never going to get their orders filled. So that's how I think of it. And if that's not happening, so again, if price and cumulative delta aren't correlated, well, my first thought is going to be, well, there's going to be a little bit of noise in there, right? But then if what I'm seeing is more than noise, then I'm really seeing like really strong limit order. Why? Why would I be seeing that? Right? Then you really have to start asking the questions. What's the context? What is it about that price that you're seeing such strong limit order buying in there? Now it's a little bit different in the ES because in the ES you're probably going to see that kind of absorption at like every turning point. So well, they've been hanging out here down at the lows a number of times here now. This is really interesting. The chart pattern in the treasury down towards the bottom here. I need to minimize that. Down towards the bottom, you see the pattern in the treasury. It's like down, up, down, shoop, shoop. It's a little weird because normally you would expect it to just. Yeah, exactly. Good opportunities are highly competitive. That's why you miss a lot of good trades. Meanwhile, on bad trades, it is really easy to get filled because those trades are less competitive. Yeah. Well, yeah, that is a really good way of putting it. If I was teaching somebody new, I would just tell them, listen, there's a really big risk of informed trading against you when you put a limit order out. But so it's always going to be the case. You as a retail trader, when you get filled on a limit order, might not necessarily be a good thing. But that's why we put so much effort into if you want get filled on a limit order, you don't want it to tick against you, right? I hate it when I come over here and I take a trade in the micros and like then I'm immediately down $5. I hate that. That is not what I want to see happen. I want to come in and hit into it with a market order and have that offer cleared and be bid immediately. And if I don't get that, I probably made a mistake. Now it might happen and then it's only like that for a few seconds and then it goes against me. There's nothing you can do about that because there's a lot of randomness. But like on that initial one, you know, it's a lot better to try and catch the edge or use an iceberg if you're going to get filled on a limit order, right? That is an edge that you can take advantage of. It's a teeny tiny little edge, and you're gonna, especially if you're looking for 4 ticks, you're gonna need more than just that in the long run. But that's just like one thing that you can always do, right? Have you ever attempted writing a market maker code and seeing how it does? Not quite. So I've tried doing some high frequency trading bots that look for aberrations in the order flow and try and trade those. And what I found with those was that the quality of my data wasn't very good. So the shorter the time frame that your automated strategy is, the less likely it is to match up to the back tested performance. So you're going to see this thing where, you ran it live and it took these trades, and then you run the back test on the same day and it does slightly different prices and stuff, right? You're more likely to see that the shorter term your trading strategy is. Okay. And these strategies were using like 5-second, 30, sub 1 minute bars. Okay. There was some things that were really encouraging about them, and I haven't given up on those trades and signals. I think that my understanding of the market and the liquidity is a lot more advanced than when I wrote those. And I don't know how I program that stuff into a robot, right? But I do think if I was going to do a robot like that, I think that correlations have to be a really big part of it, right? Like if I'm making a market making robot for the 10-year, then I don't want to buy this if we're seeing really strong selling in the ZB and the ZF, or we're seeing 6J move down, right? Like I want to adjust what my price is based on what these are doing. And in a situation like today, I very much prefer to only want to take a short, right? And the question is just kind of like, what's the edge of that area, right? Where's the spot? If we have a liquidity hole, like this is the way that you got to think about it. If you're gonna scalp or market making strategies is what we should call them. If you're gonna be a market maker, is if I get filled, I need to make it so that the probability is that the person that was filling me is stupid, right? Which, a correlation is probably the strongest way of doing that, right? If I'm doing it, so like in this instance, okay, if I'm on the offer, right? Is that person the person who buys it here at L5, are they dumb? Maybe. I mean, we don't really know what all of the correlations are, but what do we know? Like the range has been all the way up to here, right? So, but if I know that there's a liquidity hole at 06, 07 or something, and they have a hard time staying above this VWAP, right? If I'm sitting right there at 07.5 and they hit into me, probably the person that's hitting into me is somebody that's like expecting a breakout, right? And doesn't know the correlations and all that stuff, right? It's just you got to position yourself in a situation where you know something, and the people that are trading against you are either really don't know what's going on, or they really, really know something that's going on, right? Because those people that really, really know what's going on, that's going to happen a lot less. But without those kind of edges in your favor, then the probability of adverse selection will eat away your profits. Just eats away your profits. It's really frustrating. Yeah, in NQ, if you use a market order, you can get slippage. There was this, man, I got to tell you, this thread was a little alarming to me. Somebody asked, okay, if I came in with 10 lots on NQ, would that potentially move NQ? How far would that move NQ? Like what was the and all of the retail traders that posted in there were like, oh no, like there's just no way that any retail trader could ever have any impact on anything. And I'm coming over here looking at the NQ and seeing that they only put like 2 lots, at a price some cases. If you were to do a 10 lot market order, just with the liquidity that was sitting there, you're likely to get 3 ticks of slippage, right? Market totally reacts to that stuff. Could be even worse. Okay, Nassim published this thing. I'm glad that Nassim is using his medium.com blog more often. I like it. By the way, us sitting at 06 kind of is proof that our decision making and reading of the liquidity today was correct. Even though we could have pulled a lot more out of it, we were correct in that there's a hole right here, and that it's a lot more difficult to get through here because of the liquidity. Probably something like that, if not more equal. Right. Any freedom you could suggest for the NinjaTrader 8? No. I mean, there's just the default one. There's some paid DOMs. You can write your own columns for it, but I don't know. Like, here's the thing. What I do, there's lots of ways to do it, right? But what are we really doing? We're trying to read the liquidity, okay? And we're using the proven behaviors, stylized behaviors of markets to kind of judge things about the current action, right? Are we seeing, or do we have evidence of large meta orders? Do we have evidence of liquidity holes? Do we have some situations where price moved through a space so quickly that there's a wake behind it that will suck it back up? All of these behaviors that I talk about in the stylized behaviors of markets video, right? You could do that stuff with charts in NinjaTrader 8. You could come in and you could use the volumetric bars. You could come in and you could use indicators that just show cumulative delta and so forth. There's lots of ways to do it. I think that the DOM, it's the easiest and most accurate way to do it, but you can get around it if you have to, right? Now, I have to say though, here's the thing. I got to be really careful about saying stuff because I don't want to make like recommendations, like really bold recommendations that, because I can't decide which software is right for you, right? You have to decide that. You have to look at your own specific circumstances. Okay. That's why I'm trying to be cautious here. But in my opinion, if you're not using the programming features of NinjaTrader 8, it's not worth it to buy that over Jigsaw. Right? So Jigsaw has charts built into it. It has order flow charts, footprints, and volume profiles built into it. So if you're not doing anything custom, then there's no real reason to do the NinjaTrader stuff. Where I think NinjaTrader shines is the ecosystem, all of the custom indicators that you can get and being able to program your own strategies and stuff. That's the thing that Jigsaw can't do, right? Okay. Now, there's another side to that, and that is that Jigsaw has a monthly fee, okay? But it's like, think about it for a second. You're spending about let's just use even numbers and say that NinjaTrader is $500. It's actually less than that, especially if you use the coupon that you get from the link in the video description that gives the channel a commission. I always want to make that clear because I don't want anybody to say that, you're shilling Jigsaw and you're not being open about that you get paid if they buy Jigsaw. I get a commission if you buy it through my link. Okay. Helps the channel out a lot. That's how we're able to have the nice camera and stuff like that. But, so that's $500. NinjaTrader is like $900 for the license, right? So that's like a $400 difference, right? Jigsaw's $400 cheaper, but you have to pay $50 a month to do the live trade license with Jigsaw. Okay. So that's equal to about 8 months. Well, 8 months comes out to about the average amount of time that a person uses a piece of trading software. So that's why the numbers come out the way that they do, right? But if you're unprofitable, here's the thing. If you are not a profitable trader, if you're just starting out, I have to say, like this is your first year trading or whatever, and that's probably the case if you're looking for a platform, right? Then you can get Jigsaw and you cannot pay for the live license and just trade sim for years, frankly, and save money, right? So in the end, in that case, Jigsaw is cheaper by a long shot. Okay, is if you're going to trade sim for sure. Okay. Now, if that is still too much for you, then just remember that there's all these other platforms like that are come from brokers. So start looking at individual brokers. Edge Clear, Optimus Futures, Iron Beam. They all have their own platform that is, they're usually piggybacking off of another platform and then adding their own stuff to it. Okay. But those platforms are very often completely free. Completely free, and all you're paying for is data and commissions, right? So if money is an issue for you, then you probably want to go to those platforms, right? And then, I should also put a word in for Sierra Charts, because Sierra Charts is a really strong order flow suite that is very popular and is cheap as well. But I'm not as I don't recommend Sierra Charts as much as I did in the past, because they're kind of starting to become very proprietary as well, which I hate. Did you use Footprint in Bookmap? I've never used Bookmap. I'll be honest with you. I think that Bookmap is a really awesome tool. I don't think that it gives me anything to my trading that I don't get with Jigsaw, but I still think that Bookmap is a really cool piece of software. Like if Bookmap approached me and said, "Hey, we want to do something with you," I'd be totally down. But for just me in like my own trading and stuff, I don't pay attention to it, right? Long learning curve with, yeah. This is the problem with Sierra Charts, is that their interface is not very well thought out and confusing. But there's so many options. I got to tell you, it's pretty crazy. I mean, there's a lot of money in futures trading platforms. There is, because it's a high dollar item, especially if it's like only one or two developers. You don't really need that many people a month. You're charging $500 a month, or a $500 initial fee, or whatever it is, right? $500 a cell. You to pay for two programmers, you only need like 20 cells, right? 1,000 times 10, 10,000 pays for two developers. Yeah. See the benefits of bonds over other markets, but it's like watching paint dry. Uh, I don't see it that way. You know what? I used to be like, totally. Yeah, there's things that are frustrating about bonds and stuff. I think about it a little bit differently now. Here's why. Like, yeah, there's always something crazy going on in ES, right? Always an opportunity to take a trade and everything. But the reality is that like 90% of that movement is noise. It's noise. The treasury moves when there's a reason for it to move. And when it moves, it can move. So the bond is not actually more boring than other markets. It's just that other markets have more noise. Do you really want to trade a market that's more noise? Well, I guess if your trading strategy is trading the noise, but there's not very good evidence for efficacy of noise trading. In fact, all of the studies are basically show that market makers and informed traders make money at the expense of the noise traders. So, you know, and there's another effect. Here's another effect that's really important. Well, I don't talk about it very much because I'm not really aware of the literature on this so much, but I see it referenced in so many other studies. So basically, there's this thing where the thicker an instrument is, the more um, predictive indications you can find on it. Essentially, larger instruments are more predictable. So you could potentially find more edge in trading a thicker instrument, with the disadvantage being that you have to deal with the liquidity. But I don't know, man. Right now in the treasury, you kind of get the best of both worlds because the liquidity isn't very high, and so you get a lot of moves. You get moves that are, well, not a lot of moves, but you get strong moves. You can it's easier to get fills, and you still have a lot of predictive movement and stuff, and you don't have to deal with noise as much. And when you know where the liquidity is, and which is very, very clear to see in the treasury, like we can see it almost immediately as soon as one of these rips starts to form, to be like, oh, we got to be cautious here because I don't, like on the move down, for instance, a good example, we saw the liquidity hole at '06 almost immediately, right? So when it balanced out there a little while and then went lower, I wasn't jumping to sell it anymore because I knew of that liquidity rip kind of was not helpful, right? And so now I can read all of that as just noise, like range extension noise. Okay, they did that over here, then they did that over here. Like I can see that zigzagging is very clearly noise and not the, oh, it's about to break out, because I can see the liquidity so well. It's really interesting because like the empirical properties of the liquidity really do tell you a lot about how it's going to behave. It's just that you can't rely on that one thing alone, because what's the wrench in all of that? Large meta orders. Large meta orders can cancel all of that out, and that's the thing that would make, if it wasn't for large meta orders, then probably we could just read the liquidity and make money. Right? We could just do this. Because all of these trades, well, excepting this ES one, which, by the way, we took off at 30 and there was another 10 points in it. Wowee. But all of that was from reading the liquidity after a large meta order had already gone through. Cool, huh? And then on top of all of that, we're like the only people that talk about this shit. I've never... Somebody was saying, oh, here's a channel that talked about market microstructure and stuff, and I want to watch it. It wasn't the same thing. They had some... that the information that they were sharing was true, but it wasn't the empirical data that we've shared on this channel. We're the only ones. We're the only ones. And it's like everything. Isn't that crazy? I just can't imagine. Well, I mean, listen, trading is going to be hard even with that big of an advantage, but be pretty hard to find more of a leg up than that in today's markets, don't you think? Real proven empirical data that is extremely descriptive of why markets move the way that they do and how technicals and liquidities will affect the markets, right? And nobody else knows about it. Wow. Not to brag, because I didn't come up with all that stuff. I'm just sharing with you the empirical evidence. But retail traders are so hung up reading charts that they never learn this stuff. They're not looking for it. How are we doing today? Oh, it's almost time to quit. Maybe now is just a good time to stop. Yeah, it's kind of been interesting, the viewership on this stream. I'm coming in here and looking. We don't get up into the 30s as often anymore, but like it's more consistent. Like it's between 16 and 24 pretty consistently. I don't know. I might have done, there's probably a few There was a while ago where we were having some trouble, and I think that some people left, but I think that YouTube just does not send people to the stream so much anymore, which is okay. But okay, so Biza, I think that my recommendation is get the independent package. So there is education that comes with the independent package. Okay, I recommend read that, try trading for a while on Sim, and then if you feel like you don't understand stuff, you know, then you can go and you can buy those other packages. But I don't think that what is offered in those other education packages is so useful that you have to have that, and that it's a good leg up to start as a trader. You know, um, I think that the stuff that is in the videos that I got is going to be like a huge edge for people if you really understand that stuff, right? And that doesn't get taught in any of these other education courses, right? So like I said, it start with the independent. Then after you've been trading for a while, you really feel like you don't understand order flow. There's all these things that are confusing about it. Then don't go and read those other education packages. When you're starting out, there's no reason to, unless you're rich. I mean, if you're rich and you can afford it, then by all means, spend the money if you've just got the money to burn. Listen, I'm not joking, because like my audience is like the two extremes, right? There's a lot of people that are kind of more like me, like well, I'm probably on the higher end of that because I'm a software engineer and everything. And I've made some pretty lucky / good choices with buying a house and everything that puts me in a pretty good position, right? But there's guys like me that we're not willing to spend the world on it, but it's kind of more of a hobby, right? And things are tight because any money that you spend on the platform is money that doesn't go into your account, and when it's only going to be $1,000 account anyways, like $400 matters, doesn't it, right? But then there's these other people that just are millionaires and can just spend as much money as they want on it, and we get both of those here. Do you think FX has similar noise as ES or less, but yet despite still no noise? Um, I think that the noise in ES is unique in the way that it behaves. I've never seen any empirical data on that kind of stuff. All I know is that I find the S&P 500 very difficult to predict on 30-minute timeframes, except for in a few niche scenarios where there's a really strong trend comes. But if there's not really strong trend, it can be really hard to find a good spot in ES. And what you see most people trading ES doing is noise strategies. Basically, their stop and target, their target is a little bit closer than their stop, almost always. And then, they're just sorting it out from that. And what that does is it increases the kurtosis of your strategy. So most of the time you're going to win, but then you're going to have like really bad drawdowns at some point, right? And then the whole game becomes being smart and not trading and weathering those drawdowns well, which most people don't. If I had to trade another market outside of bonds, well, so I think that the problem with that one is that the amount of margin required to trade an instrument is a significant factor, right? But I think that oil is probably a better spot to go. Now, they have micros in oil. Of course, you're still risking a lot of money trying to trade oil these days because of how far it's moving. But that is an instrument where there's a lot of volume and not so much noise as there is in the ES because it's like the primary market for the thing, right? So your read of order flow is going to be a little bit more reliable. Those are all great places to go. Or here's the other option. Find a market that is very immature. I mean, I don't know if this is really a good place anymore, but for a long time it was cryptocurrencies, right? There was a lot of opportunities for you to do stuff in cryptocurrencies if you knew how to program. If you knew how to program. But yeah, no, there's always smaller markets. It could be in another country, right? I tell you what, if you had access to the Chinese markets, there's some opportunities in those places. Right? So that's where I go. I gotta get going, guys. I will see you tomorrow. In the meantime, stay profitable, friends.